There is a caution spreading right now, aimed directly at anyone holding XRP. Sell while there is still time. Step away before the window closes. And for a moment, I want to treat that warning with respect, because the headlines surrounding it are not imaginary. There is conflict across the world. There is red across the screen. And some of the most recognizable figures in investing have suddenly become very vocal about being finished with crypto. But the more time I spent thinking about that warning, the more clearly I saw something. It is aimed in the wrong direction. The people who truly need to be concerned are not the quiet holders still sitting patiently. It is the people who arrived only for the simple, comfortable part. And if you are one of those quiet holders, if this week has felt a little isolating, the headlines unsettling, the big names stepping away, and nobody around you really understanding why you are still here, then I want you to listen closely. That exact feeling has a name in this market. It is called being early. I am not going to say that casually and move on. I am going to walk you through, calmly, why the most lonely moment to hold an asset is so often the moment that eventually rewards the most, and why what is developing beneath XRP right now matters far more than the noise sitting above it. So, stay with me. Welcome back to XRP News Wire. Let's begin with what this week actually feels like, because I am not going to pretend it feels easy. You open your screen and everything is red. XRP has moved lower again. The broader crypto market is selling off in unison, and the headlines are doing nothing to help. There is genuine tension in the world right now. Conflict in the Middle East, oil moving, the kind of macro uncertainty that causes every risk asset to shake at the same time. So if you feel that tightness in your stomach, that does not mean you are weak. It means you are a human being watching numbers move against you. But here is the first detail I want you to notice, and it matters. When everything drops together, that usually tells you something. XRP did not fall this week because something inside XRP suddenly failed. It fell because the entire risk market reacted to the same headline at the same moment. That is not a final judgment on the technology. That is weather. And weather, by definition, eventually moves on. I have watched enough periods like this to recognize the rhythm. Geopolitical fear appears, screens turn red, the loudest voices announce that the cycle is over, and then, a few weeks later, the chart that seemed like the end of the world becomes just another pullback on a longer trend. I cannot give you the exact timing. Nobody can, honestly. What I can tell you is that mistaking a frightening week for a destroyed thesis is one of the costliest errors a holder can make. And there is something strangely useful hidden inside a week like this. Pressure separates people. When the screen is green, everyone sounds like a patient, long-term believer. It costs nothing to talk about conviction when you are already in profit. It is only when the candle turns red and the news becomes uncomfortable that you discover what someone's belief was actually built on. So, while I am not going to tell you to enjoy the drop, I would suggest that you observe it differently. Not as damage being inflicted on you, but as information being exposed about the people around you. Watch who becomes loud the second the screen turns red. It will tell you more than the price ever could. Over the past week, several of the most well-known names in investing publicly expressed frustration with crypto. People you would recognize: Mark Cuban, Anthony Scaramucci, Mike Novogratz, Gary Cardone. Big names, large audiences, suddenly sounding exhausted, irritated, almost personally offended that the price had not behaved the way they expected. I want to be careful here, because the easy thing would be to ridicule them, and that is not what this channel is about. These are intelligent, accomplished people. But I would ask you to separate the person from the behavior, because the behavior is where the lesson is. What you are watching when a famous investor complains that an asset is not rising is not analysis. It is emotion dressed in professional clothing, and it quietly revealed something important. Their reason for being there was the price itself. That was the entire thesis. Up is good, down is bad. Here's the problem with that. If the only reason you hold something is because the number is supposed to go higher, then the moment the number goes lower, you have no reason left. Nothing solid to hold on to. So you become irritated, you become loud, and eventually you walk away. It is completely predictable, and it has very little to do with the asset itself. Now compare that with an entirely different type of reason. Imagine holding something not simply because you are betting that the price will rise, but because you believe the underlying technology is going to be used, genuinely used, embedded into the infrastructure of how money moves around the world. If that is your reason, then a red week is frustrating, yes, but it does not touch the thesis. The technology did not become weaker because oil prices jumped. The use case did not disappear because a headline frightened the market. Your reason is still standing exactly where it was before. That is the real dividing line in this market, and it has nothing to do with fame. It separates people who are here for a number from people who are here for a reason. The loud voices this week mostly revealed themselves. They were here for the number, and when you are here for the number, every dip feels like betrayal. So, no, I do not think the warning aimed at XRP holders is the real threat. I think the people leaving the ship at the first flash of red are simply showing you which group they belong to all along. So, which group are you in? Before you answer, let me show you what being in the right group has historically required and what it has historically rewarded. Because there is a reason this feels so uncomfortable right now. Here is a pattern that appears in almost every technology that ever became important. The people who made the greatest returns were almost never the ones buying beside the celebrities. They were the people buying years earlier, when it was quiet, confusing, and slightly awkward to even mention at dinner. Think about what that actually feels like in real time. Being early does not feel like being brilliant. It feels like being alone. It feels like holding something the news is criticizing, something your friends do not understand, something famous investors are publicly leaving behind. Every signal around you tells you that you are wrong. That discomfort is real, and I want to name it honestly, because very few people tell the truth about it. There is a cost to being early, and that cost is not just money. It is the months, sometimes years of doubt you carry while everyone else waits for permission to care. I think of it as an early tax. You pay it through patience and through lonely conviction, long before any reward ever shows up. And the reason most people never become wealthy from a good idea is not always that they chose the wrong idea. It is that they could not emotionally afford the early tax. They tapped out during exactly the kind of period we are moving through right now. Because here is what happens on the other side. When the technology finally becomes obvious, when it feels safe and popular, and when the news starts covering it for positive reasons, that is when the large famous names come rushing in. Not during the lonely years. They arrive later at much higher prices, and they will speak about it as though they believed the entire time. And the quiet people who paid yearly tax, they are the people those latecomers ultimately buy from. Let me stop here and ask you something directly because this is the real test. Be honest with yourself for a moment. If XRP dropped another 20% tomorrow, would you still believe in the reason you are holding it? Type yes if your conviction would remain, or type no if you are honestly unsure. There is no wrong answer, and I am not testing you. I simply want to understand where this community truly stands. Sit with whatever answer came up for you, because what I am about to show you next is the exact reason I would answer yes without hesitation. So, while the famous voices were becoming loud at the surface, something quiet was being built underneath, and almost nobody was paying attention to it. Let's talk about what most headlines skipped this year. While everyone was staring at the price chart, capital was quietly moving in a direction that does not fit the doom narrative. For most of 2026, the spot XRP funds continued attracting money, sometimes recording their strongest months of the year, even during weeks when the much larger Bitcoin and Ethereum funds were seeing money leave. Sit with how unusual that is. The asset everyone says nobody wants continued drawing steady, patient capital, while the popular giants watched capital walk out the door. That does not look like the footprint of people chasing a pump. It looks much more like positioning. And then there is the part that genuinely caught my attention. Not a price forecast, a working demonstration. Earlier this year, a tokenized U.S. Treasury was settled on the XRP Ledger in a pilot involving names that do not appear for hype: JPMorgan, Mastercard, Ondo. The redemption reportedly settled in seconds, connecting a public blockchain with the old interbank timing that moves the world's money. Read that slowly again. Some of the most serious institutions in traditional finance moved a real-world asset across these rails, and it worked. That is the part I keep returning to. While famous investors were debating whether the number had gone up this week, the real infrastructure was being tested by real institutions, quietly, without applause. And on the regulatory side, the framework everyone has been waiting for continued moving forward as well, with the clarity legislation advancing through the Senate this spring. None of this is the loud part. None of it creates a dramatic thumbnail. But it is the part that determines whether the long-term story has substance. I want to remain honest and measured about what this does and does not mean. A pilot is not mass adoption. Steady fund flows do not guarantee anything. I am not going to insult your intelligence by pretending one demonstration sends the price to some magical number. What I am saying is that the distance between the headline story and the foundation story has rarely looked this wide. At the surface, fear, red candles, famous people quitting. Underneath, institutions building, capital positioning, rules slowly taking shape. When those two pictures disagree this strongly, the quiet one usually wins over time. It just takes longer than most people would prefer. Now zoom out, all the way out, because this was never only about 1 week, or even one coin. It is about what the entire system is quietly becoming. Step back and look at the direction everything is moving. It began with stable coins, which are basically ordinary money transformed into a digital token that can move instantly. That was the first crack in the old wall. But no serious person believes it ends there. The same logic that can tokenize a dollar can tokenize a treasury, then a bond, then a stock, and eventually almost anything with value. Piece by piece, the financial world is being reconstructed into something that can move at the speed of a message. And in a world like that, something has to sit underneath it all. A neutral, fast, liquid asset capable of moving value between all of these tokenized things without friction. A bridge. That is the role assets like XRP are quietly being positioned to play. Not a lottery ticket. A piece of plumbing for a financial system that is gradually being rebuilt right in front of us. This is why I become a little restless when the entire conversation gets reduced to whether the price is green today. That question is not invalid. It is simply small. It is like standing at the beginning of the internet and asking only whether your one stock moved higher that afternoon. The real story was what was being built. And the people who understood that could sit through years of noise, because they understood what they were actually holding. That is the XRP News Wire foundation, beneath my optimism. And I want to be clear, it is optimism, not a promise. I do not know the price next month. I do not know the exact year when all of this fully arrives. What I do know is that the reasons I am here have not changed because of one red week or a handful of loud headlines. If anything, the foundation became a little stronger this year while most people were distracted by the noise at the surface. So when someone hands you a warning and tells you to run, it is worth asking what they are really afraid of. Usually, it is simply the discomfort of the early years. And the early years, as lonely as they can feel, have always been where the real opportunity quietly lived. So let me bring this back to where we began. There is a warning circulating, aimed at people who hold XRP. And after walking through all of it, I think you can understand why I believe it is aimed in the wrong direction. The danger was never the quiet holder sitting through a frightening week. The risk belongs to the people who only showed up for the easy part and who leave the moment it stops being easy. You do not have to be loud to be right. You do not have to feel certain every single day. You only have to know why you are here, and be willing to carry the early years while everyone else waits for permission. If this gave you a steadier way to view your position, then it did what it was supposed to do. Take a breath, zoom out, and remember that calm is a strategy too. I will see you in the next one. This has been XRP News Wire.